Hello, my name is Kesia Rust, and I'm the Executive Director of the Center for Affordable Housing Finance in Africa. I'm very happy to be here with you today. CAF is also the Secretariat to the African Union for Housing Finance, which is an industry body that represents over 50 different private sector bodies across the continent, all who are working in affordable housing on this continent. And delighted to have the opportunity to host this webinar by the Housing Finance course for Sub-Saharan Africa. It's been a partnership that we've been together working with the University of Cape Town and with Wharton University of Pennsylvania for very many years. And certainly my interest in this course right from the beginning was I wanted to take it and then wanted to have it available for colleagues. And I don't know if there's anyone in the housing sector around the world that hasn't been taught by Marja, by Professor Marja, and certainly on this continent that everyone is familiar with and has seen and participated in lectures by Professor Francois Viruly. So let me hand over to you both, and thank you so much for coming to give a bit of a teaser for this housing finance course that's happening finally live. So we actually can shake hands, which would be so nice, and see one another all in person. And I hope everyone here, A, is coming, and B, is bringing your friends, which means please would you go and get a visa right away. But I'll hand over to you, Francois.
Kasia, thank you very much, and welcome to you all across the continent. Bonjour, bon après-midi pour les Français, les francophones. We are very proud at UCT to offer this one of our flagship programs, which we've been doing for well over a decade. I am Associate Professor Francois Viruly from the Department of Construction Economics and Management at UCT. And the convener of the program. As always, we are rigorous with these programs. We don't take these programs lightly, and we are always delighted to have partners with us, the Wharton University of Pennsylvania and the Center for Affordable Housing Finance in Africa, partners that we would not be able to deliver without. Kasia, as you mentioned, I think most who are involved with property and certainly residential property across the African continent will know Dr. Marja Hoek-Smit, professor as well. And I recently retired, although you never feel from Marja that she's recently retired, far from it, but retired director of the International Housing Finance program at the Wharton School, University of Pennsylvania, and as I mentioned, adjunct professor in real estate department of Wharton School. She's involved with many programs across the continent, and of course with the University of Cape Town as well. And Marja is also well known for her advisory role across the continent for both governments and non-private sector institutions. I think from what I see from the profile, which is important, and that is, I think, Marja, I think you've worked well over a dozen countries in Africa. Just about half the countries have had the experience that you've shared over the years. Also from your work on the advisory board of Human Habitat for Humanity at the Viruly Center for Innovation and Housing, and a board member of the African International Housing Show. And also a founder of the Housing Finance Information Network, HFCSSA. So for us, it's an enormous privilege every year to be able to deliver this course with Marja and many of the other lecturers that are also involved in the program. These sort of programs also don't happen with a strong administrative backing behind us, which comes from our partners And in particular, Amy Thompson. Amy, are you there? Yes, Amy is with us. And of course, Heidi Tate is with us as well. I think she'll, okay, there's so many things. I probably don't see it on my screen. These are your contact individuals. So we will be putting some links as we go through the presentation. But if you have any questions, I think Amy and Heidi would probably be your first point of contact. What we thought of doing in the hour that we have in front of us. Sorry, I think there's a microphone open somewhere. If we could just ask those just to switch off. What we thought we'd do is Marja Hoek-Smit will start with her presentation on the market. And I think really the idea is to share some of the critical themes that we would be dealing with during the course of the week in early March. I thought what we do then is see questions. Let's also by itself use this as a learning experience. I think there's much that we can learn in the coming hours, so feel free to ask your questions. And then what we will do is wrap up. And as Kessie mentioned, please keep an eye on the chat room. We'll be putting some critical links there as we go along. I hope I haven't left anything out or anybody out. And if not, Marja, let me hand over to you.
Thank you, Kessie. Thank you, Francois, for all these lavish introductions, but particularly about the quality of this course. It's really a wonderful course. We have absolutely the best teachers from Cape Town University, Stellenbosch, all teaching in the course. Kessie is teaching in the course. So it's always a very exciting course. And particularly now, since we are live for the first time in a few years. So I look forward to the beginning of March, and I hope to see many of you. This is a teaser, as we call it. I find this a very interesting word. It was a bit new to me. But a teaser, it means that I will not go into any depth in some of the problems, because that we do during the week in Cape Town. But I begin to frame the course, and particularly the larger issues that the African subcontinent is facing in the housing sector. So please feel free to raise your hands or write a question in the chat. Someone else is keeping track of the chat, but they will stop me when there are questions. You can also wait with your questions until the end, whatever you feel like. But it may be easier to do them when I begin to talk. So the motivation for the housing finance course, when we started actually this course already at Witwatersrand University in 2001. So it is already a very old course, but for the last decade plus, we have been working with a fantastic group of people at Cape Town University. And of course, it was motivated by the incredible need for housing that could not be translated into demand. So we had an enormous, overwhelming need for housing, but the ability to pay for housing, which is really demand and willingness to pay, wasn't there. And a lot of that problem was because there was no access to housing finance. So we thought we should start a training program so that private banks, government entities, and so on could begin to come together in a teaching framework and learn from global lessons also, and from other systems in Sub-Saharan Africa, how we could move down market that whole housing finance happening. And so, because without finance, developers will not build. And we needed to get that machine going. So that was a big driver of this course for Sub-Saharan Africa. The rest, Keisha has already talked about, and Francois. We focus on Sub-Saharan Africa, but we also give a lot of cases of countries that we're also having a very small dysfunctional housing finance system, maybe only as little as 7 years ago, but have moved out and have grown their housing finance systems strongly. Like we give the case of India, and I give many examples of countries that I have worked in. Apart from my work in Sub-Saharan Africa, I work globally. As many of you know, I see many of my friends. So I am privileged to know about a lot of different countries and what made their housing finance system for the underserved, low income, informally employed, move out and expand. So that was the motivation. And this teaser is just a short one. In 3/4 of an hour, I will give you the larger picture, hopefully, on the housing finance system in Sub-Saharan Africa. But the core messages of this particular teaser workshop are, first of all, I want to say that a lot of positive change has happened, even in the decade that I have been at Cape Town. But certainly when I look back to the year 2000, when I started, and I started to work in South Africa in '94 with the new government on housing policy in South Africa. And my first job actually in Kenya was in 1974 when I worked with the Ministry of Housing. So when I look back at all these different landmark dates, a lot has happened, a lot of positive change. Then, of course, we are now in the middle of chaos, I would call it, globally, and also in Sub-Saharan Africa. So many shocks have hit our economies, and these shocks are particularly bad for the housing sector. So we will talk about that a bit. But then I want to come back to the positive message and show that the housing sector offers a very an enormous opportunity for economic growth and economic recovery, health improvements, and so on and so forth. And we are going to focus on how can we make it possible for the housing sector to play that role. And then we talk about the how we can improve the primary market, the capital market, also the supply market, the property market, because they all have to work together to improve the overall housing sector. And what role housing finance systems, particularly in frontier markets, can play. We look also at rental housing and developer finance, because developers need finance, rental landlords need finance. So we look at those things, but not all in great depth in this workshop, of course. 3/4 of an hour is not enough. So let me then go on and talk first briefly about the progress that we have made. We have seen indeed a decade-long improvement in housing globally, basically in emerging markets, but also particularly in Sub-Saharan Africa. We have seen a long period of macroeconomic stability, which is absolutely critical when you want to expand long-term lending. We have seen new products in the primary market, not just mortgages, but micro mortgages, tenant purchase loans, microfinance. We have seen all these products develop that are very important for the bottom of the market. We have seen policy reforms, new mortgage laws, a better enforcement of those laws. We have seen in some countries great progress on consumer protection, the reform of the subsidy systems, although not nearly enough. We have seen the state coming in and understanding the role that they have to play in improving the housing market outcomes in many countries. And then we have seen policy innovations. We have seen many liquidity facilities in the subcontinent, but also globally, to make access to longer term funding possible for the private banks and the government banks. And we have seen capital markets develop timidly, I call it. And then we begin to see more guarantee schemes coming in. We have seen introduction of credit bureaus and better credit information. So a lot is happening in the housing finance scheme or housing finance system generally. And then we begin to see, and there was a whole conference just now about it with the union, we see ESG innovations, but mostly a bit on green, very timidly on sustainability and governance. So one thing that we do in the course is we go more in depth on how that area can be improved. So on the whole, a lot of positive energy has been going on in the housing sector, both in the Anglophone and in the Francophone parts of Sub-Saharan Africa. However, we are now in the middle of multiple crises that have hit the economies and the finance sectors in emerging markets, including in Sub-Saharan Africa. I am not going to list them all. You know them. We have had COVID. We had with an enormous impact on economic growth. We have strained fiscal situations because so many countries had to go in debt and increase their debt levels. We have now soaring inflation in many countries, and that's very bad for housing. And also fiscal spaces, because of the debt levels and the lack of economic growth, or the lower economic growth, our fiscal space is very tight. So subsidies are therefore of very limited, a limited option. So we have, as a result, increase in unemployment and an increase in poverty rates, which is very worrisome. We have interest rate volatility, which comes with this inflationary pressure, and therefore a decrease in long-term lending. Investors also have moved away from emerging markets, although just this past 2 weeks, there has been a return more to normal, and we see a flow into emerging markets again, which I was very happy to notice. The debt levels we already talked about. Let's look at the numbers and how dramatic these shifts over the last 2-3 years actually have been. So when we look at the IMF World Uncertainty, they keep something like an uncertainty index with all these different periods of great uncertainty. And here we had the COVID uncertainty, the period of great uncertainty about economic growth and everything, health stress, although Sub-Saharan Africa was hit not as bad by the health impact itself as other continents. but particularly the economic impact of COVID was dramatic. Then we had this Russian invasion of Ukraine and the war, the inflation that brought, and so on and so forth. So we have peaks of uncertainty, which is very bad for long-term investment. And housing requires long-term investment. So that is the first thing to notice and be worried about. Hopefully, we are beginning to see the light at the end of the tunnel. But I don't dare to say that really with great conviction. Then we have seen Sub-Saharan African GDP growth in an enormous downturn. You can see here how badly Sub-Saharan Africa's economies were hit by this real downturn in GDP. That came, of course, with an increase in poverty. When you look at this graph, you can see that the percentage of people in extreme poverty, actually the number of people living in extreme poverty came down relative to the populations. But that has changed dramatically since the COVID crisis. So we have far more people in extreme poverty. And again, that means a lot for what you can do with the housing sector and the stress that places on the housing sector, because housing is so expensive relative to people's income. And if incomes decrease and many people are in poverty, the pressure in the housing sector, of course, increases enormously. In the same vein, we have an increase in inequality, meaning high income people relative to very low income people. Again, very stressful for solving the housing problems in the subcontinent. So these figures are stressful in their numbers of what people can afford and pay for. When you now look at what the government can pay for and the public debt in Sub-Saharan Africa, you feel the stress also very much on the government side. That increase in public debt that we spoke about, that started to grow really already before COVID, but was escalated very much during the COVID crisis. We see this orange box is the domestic debt. We see the debt increase in all categories: external bonds, the multilaterals, the bilaterals. There is more debt that governments of Sub-Saharan Africa are settled with. And a large part of that debt, particularly the domestic debt, is of course held by the banks. And because the debt has a very high interest rate, brings a high interest rate on that debt, it is a good business for the banks to invest in the domestic debt of the country. But that means that when banks mostly focus on investing the deposits in the banks and so on, the money that they have in the debt of the country, less of that money in the banking system is available for issues of credit expansion, included expansion of housing credit. So if the debt service is expensive, that means higher rates, that means that it is profitable for the banking sector to invest, which is really negative for credit expansion in the country. So there is also the issue that the fiscus, the treasury, has limited space for subsidies, for infrastructure, for housing, and so on and so forth. So that public debt picture is complicating improvements in the housing sector through finance, lack of infrastructure, and public investment. Then we see, since, actually, particularly since the beginning, since the middle of the COVID crisis, an increase in inflation. First, because of supply issues, container ships could not bring goods and so on. It escalated because of the war, where food prices, because of the wheat issue, the wheat exports were constrained. We see inflation having picked up. Also, inflation picked up in particularly advanced countries because so much money was spent during COVID on improving people's well-being, and people had a lot of money to spend. So that put pressure on inflation as well. So it was not all coming from the outside, it also came from within countries. So in Sub-Saharan Africa, inflation in 2020 was roughly 12%, but it is beginning to decrease. And we are thinking in Sub-Saharan Africa, the IMF figures show that it will be below 10, definitely, or even lower in this year. The big problem is that inflation, this is the red line here, is particularly in Sub-Saharan Africa, very high for food. And food inflation is nearly the largest component of consumer price inflation in the subcontinent. Of course, central banks have tightened and increased the interest rates, which is also implicating the housing sector. And then as a result, also, we have seen tightening, depreciation of many countries' currencies against the US dollar, which is a problem for the housing market if there is a lot of import related to housing and other issues, of course. So when we take a look at the food picture particularly, this is very worrisome. We can see here that roughly 40% of the consumer price index is taken in Sub-Saharan Africa by food. People spend most of their income on food, and inflation in the food sector, therefore, is very important for what people have left over from their small income to pay for housing. So this is a very worrisome picture that indeed the food price index is going up so much, and that really is a stress on households' income. And therefore, it's hard to jumpstart the housing sector because there is so little left in the household budget for housing. But as we can see, the most recent data for the middle of, towards the end of 2022, show that it is beginning to turn down, particularly wheat prices are coming down. And that's very important. Also, corn is beginning to show a softening there. So we may be over the worst of it. Here is a picture that shows the increase in central banks' policy rates. The lighter orange is emerging markets, and you can see over the last year how central banks have in emerging markets increased their rates. And that, of course, has a direct implication for housing. So let's summarize what all these crises that come together mean for the housing sector? So as I begin to say here at the top of my slide, macroeconomic volatility and housing make very poor bedfellows. If you have macroeconomic volatility, lending for housing, which is long-term, is really very difficult to do for the private banking system. And without lending for housing, it's very difficult to see how you can expand the housing sector. So it really is a difficult time for housing, but not at all hopeless. That's never the attitude we should take, but it is also not true. So, but let's look at the constraints that we now face. With increase in interest rates and the volatility of these rates, we have a reduced demand for loans, but also a reduced supply of loans. Banks can simply not take that risk that the rates are changing. If I have a 20-year loan, how do I make it for 7 years fixed, and then maybe I adjust it? How do I know that what interest rates are going to do in the future? How can I price that product? How do I know what the risks are? Also, banks hold these high-yielding sovereign bonds at the moment. That is risk-free money for them, and that has a negative impact on credit provision. And then, of course, there is, as a consequence, a danger of stagnation in the housing sector. Also, because of the next issue, the increase in prices, the increase of imports. So those are very important limitations, particularly for finance. Then, of course, on the simple affordability level, if we have house prices increase because construction is more expensive, but incomes do not increase at the same level as we see house prices do, or even the CPI do, we have a stress on affordability. So in advanced economies, when we see increased interest rates, that often translates in house price decreases. And that has to do with the impact on financial stability, on the financial sector. Mortgages become more expensive. People do not take out loans, and it affects house prices. That is not the same in emerging markets, where the mortgage markets are very small. And what we see when interest rates rise in emerging markets is that there is particularly concern about price increases of the housing product, building materials, everything. And particularly because incomes do not go up in the same way as these price increases. So that is an enormous danger in emerging markets. And then, of course, we already talked about the fiscal space that is impacted. So no investments or limited investments in infrastructure that is very important for the housing sector, and no subsidy funding. So all these crises put enormous stress on what we can do and what is happening actually in reality on the housing sector. But as I always say, housing offers an incredible opportunity for economic growth and for social welfare. And so we are going to talk about that very briefly. So housing sector's economic opportunity is particularly important because housing is such an enormous part of GDP. And many of you have heard me talk about it. We have had, I always emphasize it, but housing is roughly 16 to 19% of GDP, including in emerging markets. And that is mostly through consumption. And we are going to talk about how that works. And through investment in new housing, home improvements. But the consumption part is a big part of that GDP. And when we look at the population dynamics in Sub-Saharan Africa, with a very young population, where many people still, it's only 40% urban, so many people are moving into cities. So the potential demand, and I bold potential here, for housing is, I call it nearly infinite. You can build and build and build as long as people can pay for it, and as long as you build what people can afford. So both on the consumption and investment side, housing is very important. And I always give this graph because we have the best data for the US to show the actual figures it can be any country, but this happens to be the US because we have very detailed figures. So housing services, which is rent, rental income, the rent that owners would pay for housing if they were renters, the services, in other words, that the housing stock provides to the economy, is roughly 11% of GDP. The operation, utilities, and all these things, another 4.5%. Investment in residential units is in the United States not so big, 3.7. In many emerging markets where you need more new housing than we in the United States, this figure is higher, maybe 5%, up to 5%. But in the US, therefore, we have 19% of the total GDP of the country coming from the housing sector. So if we can stimulate the housing sector, that is incredibly important for economic growth. And it is very often underestimated. So while we invest in housing, of course, what we also do, not just growing the economy, but we improve the urban productivity. We have more efficient cities. Not so many people live far away in informal settlements. We generate employment, skilled and unskilled, very important in a downturn. We improve household productivity. When people live in better houses, we have better health, we have better educational outcomes. And of course, people living in sound housing are less prone to be impacted by physical disasters. So there are all these additional good things that investing in housing brings, apart from economic growth. So that is why we cannot let go of the housing sector and throw up our hands and say, well, it's a difficult time, we cannot do anything. It's just not on. We have to look at the housing sector really in a positive way. So why then, if all these good things are related to investing in housing, why is it not happening? Why is housing often overlooked as an important economic sector? And that mostly is because housing markets are very complex. It is not like the market for cars. Cars come in a few sizes, a few types, a few colors. You can understand it, you understand that market. Nothing is simple about the housing market. And therefore, when we are not trained in understanding and analyzing housing markets, whether it is in ministries of housing or in the banking sector or in the treasury or the central bank, if we do not have a good handle on how to look at markets, we are not going there because it's too complicated. And that's a shame. And that's why we have this course, to make everyone familiar and comfortable with looking at the housing market. Why is that housing market so complicated? First of all, it is long-term. The housing product is so durable. I live myself in a more than 100-year-old house. I worked in Kenya in housing that was mud and wattle, but that had stood there because of the smearing that the occupants do. They improve the walls all the time for more than 80 years. So housing is durable. And so that is good and bad. So it is good because it generates, if we invest in housing, it generates this large economic output. Even though we don't understand that very well, but it provides services to the economy. It generates rents. And so very important as a consumption good in the society that provides long-term services. The housing stock also is much larger than the new flow of housing. And the focus in many emerging markets is only on new housing. And they forget about the existing housing. And the focus is always built. But we have to understand that there is great mobility through the housing stock. And because the housing stock is there for the longer term, most people live and buy existing houses. Most people do not buy a new house. I don't know about all of you, but that is not what is happening. So we have to be very careful to understand what is happening with the existing stock and to include that in our housing policies. That's not happening very often. Also, depreciation, because the stock is so durable, makes existing stock cheaper than new construction. We should keep that in mind. What you build determines the built environment also for a very long time. So that durability of housing is a great opportunity, but it is often not well understood. And that is why housing is often overlooked. Housing is also expensive relative to incomes. So if a government has to do a stimulus package, they rather give it to incomes rather than housing or whatever they do. Because the problem with housing being expensive is that in order to buy it, you need finance. And the finance system is not readily accessible for many people. So that is a constraint. So how then do you provide housing incentives to the population or to the market if my housing finance system is not ready for that and doesn't provide finance? So that is a big constraint. Also, central bank and financial institutions determine the cost of housing finance. And that is not in the ministries of housing's realm at all. And housing finance cost is a lot, makes up a large part of the affordability of housing. And then, of course, subsidizing housing is expensive and with limited fiscal resources, that's simply not possible. So the last aspect of housing and why it is a bit difficult is that housing from a national government perspective is problematic. They can provide incentives, but really a lot of the decisions about housing are made at the local level. And the value of housing is made up not just of the quality of the house, but very much on the environment, the available services, transport, schools, safety. All of these things determine the value of the house. None of that is really directly in the purview of national governments. This is all local government. And so we have this song and dance, but when you deal with the housing sector, between the national government that may want to expand housing and the local level that has to come in with a lot of inputs that determine the value. They have to make land available, infrastructure, and so on and so forth. Also, the local level has to decide on the standards in most countries. Some do it at the national level, but mostly the standards, the regulations, the permitting is all done at the local level and not at the central level. So there is that tension. And again, that makes housing more complex than any other market. And for that reason, we have many different actors when we talk about the housing sector. And that makes it often more complicated for governments to begin to really have a coherent housing policy in place that includes all the different actors and deal with all these different constraints that we just have laid out. So schematically, very simplistically, but very useful to understand, these are the actors and the inputs that are required for housing to work. Land, finance, you need all these inputs to work. You need titled land for housing. You need finance systems. Some come from local governments, some more from the central government and the banking system. We need producers, we need developers, builders, we need rental landlords, homeowners that expand their housing, build backyard dwellings, and so on and so forth. And then we need the demand to shape up. We need renters and homeowners with incomes that can actually, that are adequate to buy or rent housing. So it is a complicated picture, but not so much when you break it down in meaningful pieces. So let's summarize the role of the public and the private sector. That already helps you very much in understanding how to look at these housing markets. What are the roles of the public sector? What are the roles of the private sector to work to make these markets for housing work efficiently? On the supply side, I split it up in supply and demand. I think that helps me always very much when I want to analyze a housing system in the countries that I work in. So on the supply side, the government, the foremost task is to facilitate access to titled land. Why titled land? We cannot expand the mortgage market if we don't have titles to land. Because for a mortgage, you need a lien on the land and on the entire property. That makes mortgage credit the cheapest credit possible. If I don't have title, I can't have a mortgage, and immediately my cost of credit jumps up. Why is that? Simply because the lien on that land provides the bank or the financial institution with the security that they can access that land in case there is non-payment on the loan, there is delinquency of that loan. Therefore, the risk to the banker is so much lower in mortgage lending. When I compare mortgage lending to micro lending, that is not based on a lien on the land, it is night and day different in the cost of that credit, in the interest rate. So if the government doesn't provide titled land and put all resources it can muster to improve titling, we are very constrained as to what we can do on the mortgage expansion. Right? So that is critical. Then, of course, the government has an enormous advantage in producing infrastructure, on-site, off-site, but particularly off-site infrastructure should never be done by the private developer. That should be done by the government main trunk infrastructure, because the government can invest and use taxes and user fees for the very long term, 40 years, to pay for that infrastructure. While if the private developer has to put in their own generators, their own sewer pumps and all the rest of it, they have to charge for it in the price of the house. So that is absolutely a critical task for the government, to keep house prices in check. Then government must establish the building standards, the regulations, it has to give permits and so on. We understand all of that. It can facilitate developer finance by providing third-party guarantees. That is also in some places a very useful task for the government. It can provide tax incentives if it has the money to do so. But much more important is providing off-site infrastructure and land titles. Then once they do that, we can talk about tax incentives, subsidies, all that good stuff, but that should not be the first thing. So then the private sector is much better at development and property management. So we leave that to the private sector, and that can be done much more efficiently if the government takes care of all the other things. Then on the demand side, the demand is willingness to pay. It's not need for housing. Need is enormous, but the willingness and the ability, of course, is included in that, to pay for specific types of housing. And that depends on household formation, the composition of the household, the income levels, and so on. The government's role in expanding demand, that willingness to pay, is particularly in supporting access to finance. Without finance, people cannot pay cash for housing. It's impossible. I cannot do it. You cannot do it. We need finance. So whatever the government can do to expand access to mortgage finance, microloans, and so on, is critical for
Marja, just
demand.
another 5 minutes, Marja. 5, 10.
I will move on. Okay, the other things are government support affordability, of course, and subsidies. We talked about that. So when housing markets work well, that whole picture works. Demand is driven by demographics, the rent levels decide on the value of the house, and so on and so forth. If all these factors work well, developers will come in and produce housing. If the cost and the risk of that supply side are too high, developers are discouraged. And it is market segment by market segment whether developers come into that particular segment of the market. And we have to analyze precisely where, in which part of the market, we have big supply constraints and demand constraints so that the market cannot work well. So if we now look at the critical role of finance, of course, we now understand that on the demand side, there is no vibrant housing market in the formal sector without access to finance. We need loans to buy housing. And in inflationary times, that is a hard part. On the supply side, developers need finance, and also if there is no mortgage finance for customers, suppliers will not come in. So we need to grow that finance, but it is very small. Access to mortgage lending is very small in most countries. This is older data from Hoek-Smit, but it has improved a bit, but not dramatically so. So what are the major constraints? And that is what we do in the course very much. What are the constraints for households to access housing finance? And then what we do, we look at the constraints and then we find solutions. That is what the theme of the course is all about. So what do we do for all these people that have non-verifiable incomes? What for the people that have no proper title to the land? What is happening to all these people that are over indebted, that cannot get a loan because of their credit score and their credit history? And the very important part also is access to suitable loan products. We need diversity of credit to serve a diverse population. We also have to overcome the fear of credit by many households. So these are the constraints on the household side that we really go into depth in the course, and we find solutions for that. What are the constraints on the lender's side? The lender is particularly afraid that he doesn't get his money back, that he makes a loan and there is a default on the loan. We call that credit risk. The lenders are afraid of interest rate risk. Now with inflation, high uncertainty, there are mechanisms in place, capital market mechanisms in specific, that can deal with that interest rate risk. And we are going to talk about those. The transaction cost can be lowered for lenders on making a loan. And then we have regulatory costs that have to be looked into. The central bank charges banks, particularly for risky portfolios. How can we look at that picture with the regulator together? Can all these risks be alleviated? And what instruments and institutions do we put in place and have we put in place in many countries to deal with those risks? That's a big part of what we do during the course. And here I'm listing several of these instruments that the public and the private sector can do to overcome these risks and these constraints. So diverse housing loan products, we mentioned that already. Much more emphasis on consumer education, much more user-friendly servicing, lowering transaction cost on all sides, and yes, providing subsidies, but always with great caution. And we spend a lot of time on the subsidy side in the course as well, how to do that in a better way. So the lender risk and cost, we already mentioned, I don't have to go into this very much, but those are the topics of the course. So the longer term vision is to move to a much more integrated housing finance system, where the mortgage sector serves a much lower and more risky income group, as low as we can get, and a scaling up of microfinance and other products so that everyone in society can get a loan for housing that is suitable for each situation. We can do that and create a lot of mobility through the housing stock. When we integrate the systems well, when we allow people to get a microloan, build a credit record, and gradually move to be able to get access to a mortgage loan. So by way of conclusion then, we have had a string of shocks that have battered our economies in Sub-Saharan Africa particularly, with very negative effects on economic growth. But we should really look at the housing sector to see, even with all the constraints in that sector, how we can utilize the sector to drive economic recovery, or at least help economic recovery. We need, therefore, to sharpen that approach on high priority policy measures, scaling up of supply through regulations, de-risking developer and mortgage finance, and make sure that we have all the tools in place for underserved households to access housing finance. That agenda requires a lot of public-private sector collaboration, and within the public sector, collaboration between the Treasury, Central Bank, Ministry of Housing, that is often not well developed in many countries, but this is possible. So this is what we do in the course. We have 8 modules, and we go systematically through the analysis first of housing markets and housing and the economy. We then look at the building blocks of a housing finance system. We then go into the mortgage product itself and see what the value is of a mortgage for the bankers, for the investors in mortgages. We look at the business of housing finance, how the business makes profits, what drives these profits, what are the risks. We look at the funding of the mortgage portfolios, not just through deposits, but capital market instruments. How can that help us expand the mortgage portfolios? And then we look at the down market movement, the frontier areas of the housing finance system, as well as the ESG practices and goals that we have to put in place in that sector. We look at developer finance, and then lastly at the use of subsidies and how we can best utilize subsidies to reach different segments that are now underserved. So that basically is the outline of the course, and here are the particulars. So do enroll. It is a wonderful week. We enjoy each other's company and the learning that we do together. So I hope to see many of you there.
Marja, thank you very much for that presentation. It really gives such a good feel of what the course is all about. And I think what it really brings once again to the party is the complexities of this market, that relationship which you brought to the fore of the relationship between housing markets and the macroeconomy, and the microeconomic complexities of these markets driven very much by finance, as you said. That's what gives, and I suppose that's what makes the framing of a housing policy so difficult as well. And again, it really comes back again to, it's so easy to run a course with the 8 steps of housing development and only to realize, I think, how complex that the 8 steps steps. One has to understand the players in this market, that interrelationship between the user market, financial markets, the development markets, and how they are interrelated. Wonderful. And I think I suppose one thing with housing markets is that we've just got it wrong globally, from the most industrialized countries to the lower income emerging countries. And there's something that we need to really look at these markets. But as you said, there's positive, there's hope, there's improvement, and I think that is important. Kesja, I think you've been following a bit the chat room. Do you want to maybe go through the questions, or maybe ask those who had questions if they want to verbalize it? I mean, that we unfortunately don't have much time. We're already a bit over time, so I think with each of your questions, I think could have there's a 45-minute answer to them, but I think we'll try to keep it as short as we can. Kesja, over to you.
Super. In the interest of time, I'll summarize. And if you take exception to that, you can send me an email and then and clarify. But there's lots coming through, Marja. I hope you look at the chats afterwards of just great, exciting. Where can I sign up? Lots of excitement. There was one of the first questions was about the informal transfer of title. And so the significance of title. So I'll list you the 4 broad questions maybe, and then you can cover them overall. So that was the one. The second question was around your comment on the impact that housing has on the growth of GDP. And the question was, does that count even if government is the one building and paying for the houses in full? So if government is the one that's building it, does that count in GDP? Then someone was wondering, and we hear this often, about the definition of demand and the relationship between the willingness to pay and the ability to pay, and how do you frame that when you're contemplating demand? And then the last question is a serious challenge, and from Bob Hornsby, and I think we'll take that on also as a challenge, because it's a case study in the making where he asks with quite a lot of detail, please, can I have 2 or 3 examples of success of projects with bilateral or multilateral funding that all at once enable scale, affordability, and a reasonable return? So do you have any examples of such projects, Marja?
Marja, so thank you, guys. Marja, could I ask you to maybe stop sharing your screen if you can? That allows Amy, I think, who wants to put up 1 or 2 things before we get to the end. Otherwise, if you can, otherwise we'll leave it as it is. Okay. Yeah, thank you.
Sorry, and there was one more question. Someone asked on how housing markets work. Are inputs equivalent to supply? And I guess that's a question about gearing and leverage.
Right, on the titling, yeah, I think, what can I say? Governments have to give it priority. They have to put money towards it. We have absolutely fabulous technology in place at the moment. I mean, when I worked in Kenya, we had to fly, we had to have aerial photographs, we had to go on site with triangulation to survey. Now that's all not necessary. We have the tools in place to quickly survey and therefore go on site, verify the ownership and everything, and get titling going. It is just a matter of government priority. If governments understand how critical it is in relation to the functioning of the housing market, so that people with title can actually transfer their property at a much better rate, simply at a much better price, simply because the people that buy that property now have access to a mortgage. That is incredibly important. So the whole housing market works much better because you cannot pay cash for housing. Hardly anyone can, top 5% maybe. you need funding. And if you have a titled property, to get finance for that is much, much easier. Okay, then of course you have to be able to pay for it and all the rest of it, but at least the property gives the bank security. So I cannot emphasize enough that that is the foundation of a good housing market, and that government has to understand much better and at a much deeper level. So on the second question, growth of GDP, if government provides it, of course, GDP is done, is all the investment that is made in the housing sector, whether it is government, private sector, NGO, it doesn't matter. All the investments made in housing count towards the investment part of GDP. But more importantly, investment in housing provides housing, durable, long-term assets that produce what we call services. These services are paid for in rents, and that is a big component of GDP. And it has nothing to do who provides that housing.
Yeah.
That housing is there for the longer term to generate the consumption services, whatever you want to call it. So that is a quick answer to that question. So yes, even if government builds, it contributes just as much to the GDP as if the private sector builds that housing. The fiscal cost is a very different aspect. It costs the government money, so it comes from the budget if the government has to provide that housing. And you want to limit that as much as possible. So what the whole focus of this lecture was is try to get the private sector as much as possible to provide and manage the housing stock rather than the government, because of the fiscal constraints that the government has. And if the government comes in to support housing, do it as efficiently as possible so that you can spread that input in the housing market as widely as possible, and particularly to make the functioning of that market improve. So on the demand side, the question was willingness and affordability, right? So we have demand is really the willingness to pay, but the willingness to pay depends to a large degree on your level of income, your ability to pay. But just ability to pay is not demand.
No.
If I have money, but there is no housing stock available that is suitable for me to invest in, or I have totally different priorities, then there is no willingness for me to pay for housing that might be available, that I might be able to afford, but it is not suitable. Like housing far away, and that we see in many countries, new housing that is built on the periphery of towns where the location is completely unsuitable. People will not be happy with those houses. And therefore, we can, in the midst of enormous need for housing and a potential demand for housing, we will not see effective demand, really investment in types of housing that are in the wrong places. So willingness and affordability are not the same.
No.
And we cannot assume just by looking at the income distribution that people are willing to pay for whatever we build. Not at all. I hope that's clear. So there is a distinction here.
No, thank you.
Then on the examples, oh, and there was another question in the chat on what do you do if people have very low incomes, they cannot pay for housing, what do you do? I saw that question also. First of all, not everyone can be a homeowner, and we can provide rental housing in the rental market, which is a very important part of our housing market that we should stimulate very much. We can provide rental housing that is much more affordable than ownership housing for a large part of the population, or for that part of the population that has a terrible credit history, or both terrible credit and informal incomes, so they don't qualify for a mortgage. Well, let them first have access to rental housing, build and clean up their credit situation, and then they may be able, when they're a bit older, to access ownership housing.
Marja, could I ask you, yeah, I think just we're running 20 minutes over, so if I could.
That's it. Examples look at, we can look at Egypt, which many of you are now familiar with because of the conference. That country has done a very good job. We can look at Colombia. We can look at a more developed country like Korea that was in terrible shape only 20 years ago and has come out of this. So there are many countries I can think of that have worked their way out. Morocco is another country that is well on its way to improve their housing sector with World Bank loans, Egypt with World Bank loans, and so on. Yeah.
Thank you very much. Kesje, have we covered largely what we're seeing? I'm sure everybody would have loved to have more time, but I think in the interest, and I think we're starting to lose a few delegates. So I think it's time to start wrapping up, unfortunately. Kesje, anything from your side?
That's why it's called a teaser. Because we've teased everyone. And now they must just come to Cape Town.
Good.
So make sure you get your visas on time. Make sure you get your approval letters from your employer. All of that needs to be done like this minute, because we know it's very difficult to get all your papers in order. And it would make such a difference to the course to know who's coming early on. The one thing I think might be worth mentioning, just as a shout out also to Amy and Heidi, is that alumni of the course have ways of connecting with one another. You're not alone once you do the course. You've got a whole network of people to work through, and the advice and the engagement carries on like forever. So join.
Absolutely, you know, and property markets are known for their inefficiencies of information. So networking in this sector is all the more important. I think I'd like to wrap up, if that's okay. First of all, Marja, thank you very much for your presentation, and which really again highlighted some of the critical issues that we will be dealing with. Kesje, thank you very much to you and the CAF team behind as well, everybody involved. Some of the names we don't mention, but there are others involved who make this happen. So thank you to the entire team, and thank you very much to the UCT team. I mean, Heidi, thank you very much also for putting this together, and we look forward to seeing you in the beautiful Cape Town in early March, and if we can assist in any way, let us know. We're here to try to make it as easy as possible for you to get onto this course. Have I left anything out? Marja, Kesje, Amy, Heidi?
Thank you very much for joining. Hope to see you.
Good. Bye-bye. If I could ask